People think you've been involved in Bitcoin for a decade since, the beginning, because you've become such a strong, both knowledgeable and protagonist on you. But it wasn't. It was just a few years ago. Can you tell the story of what happened that got you excited and gave you, for lack of a better term, religion on this?
Bitcoin represents a paradigm shift. It's the digital transformation of money, property, and energy. And paradigm shifts are so profound that you're staring at them and you don't realize they took place because your worldview is constructed based upon a bunch of assumptions that you've always taken for granted. And so what Thomas Kuhn says in the structure of scientific revolutions and what we study at MIT is there's only two circumstances under which people willingly undergo a paradigm shift. And one way is you wait for the old guard to die. And
Yes.
the millennials they get it because they're different. And Einstein, said God does not play dice with the universe. Einstein never liked quantum theory. You could be a brilliant person, but you won't embrace the paradigm shift while you're alive in the absence of a crisis. The second way you get paradigm shift is a war. When there's a war and there are bombs dropping from above, you don't believe in atomic power, but then someone drops a nuclear weapon and the city evaporates, and all of a sudden you become a believer and you reassess your priorities.
I would posit there's another way, which is when something is 10 times better than anything else. 10 times cheaper, 10 times faster, 10 times better. It's like how I got my mom and dad to go to a digital camera or to use Google or the web, right? It's like when it's that much better.
Yeah, I will say though, even when it's 10 times better, what you have is a commercially successful venture. But for example, Warren Buffett never invested in Microsoft, and Warren Buffett never invested in Amazon, right? Even though it's 10 times better, right? If you have enough money and enough power, you can ignore stuff. My dad didn't use any of the new technology until at some point we gave him a television and YouTube, and YouTube did it. Like, he didn't care about all the other things, but if you can sit and you can talk to the remote and you can stream on YouTube to anything, all of a sudden 80-year-old man decides he loves this now. And so it has to just click.
What clicked for you with Bitcoin? When was it? Was it March of, was it?
It's the second quarter of 2020. The second quarter of 2020. And what clicked was we had a K-shaped recovery. Main Street was shut down. It's pretty, millions of people have lost their jobs. The economy's contracting. And then Wall Street exploded and recovered and hit all-time highs. And what I saw was
6 weeks later, right?
Yeah, financial assets were having the best year ever. People had great years. I mean, a lot of these hedge fund managers, they had the best year of their life in 2020 or 2021.
Yeah.
And Main Street assets were having the worst year in 30 years. And I had a company with $500 million in cash that was dead money. It was idle. It was generating 0% interest. The Federal Reserve said, we're not going to raise interest rates for 4 years. The company's stock was in the tank. At one point, in essence, when we were going through this, our company was valued at $60 a share in cash and $60 a share in the software business. And that was like 1 times revenue. And so, I looked at the world and I said, if the cash is dead money and if our stock is viewed as dead money, we've got a choice between a fast death, a slow death, or we ride out of the castle and we take a risk. Okay, the fast death is I just give the $500 million back to the shareholders in a dividend or a buyback. Now, I knew that wasn't going to save the company because I'd been buying back the stock for the last 5 years. I bought $300 million worth of stock back or something. And the only thing that would happen would be the stock would go from $120 a share to $60 a share. And then all the stock options, the employees would be underwater. Then all the employees would get headhunted away by Amazon and Google and Facebook, and then we wouldn't be able to compete with Microsoft. And, we compete against a company which has more power than God, right? Microsoft, right? Every company on earth is their customer. They're more powerful than all but about a handful of countries on this earth. And they can do whatever they want, wrap it into their product, give it away for free if they want. So So the challenge of giving up the capital was first we'd lose our financial capital, and then we'd lose our human capital, and then we'd have no reason to exist, and the company was going to zero. So notwithstanding whether you care whether a company lives or not, I didn't see it in the interest of my shareholders to watch the stock go to $60 a share and then watch us slide. We'd have to sell the company. So the second strategy is hold the cash. But the cash is, cash trash. Ray Dalio says that is generating 0% interest. And the money supply expanded by 20% a year for the past 2 years. You can see it in U.S. single-family homes, which shot up 40% in price. And so if the money's being devalued 20% a year and you're generating 0% interest, you got a negative real yield of minus 20%. And I did the math in my head, and I concluded that pretty much the $500 million in purchasing power would be cut into $250 million of purchasing power in 36 to 48 months. So that's a slow death. I could use cash to pay my employees, but ultimately we were sitting and mired. And so that doesn't work. And so in that situation, we decided we should do something transformational. And if you went into a Harvard B School class and corporate strategy said, what are you going to do? The investors want the cash back. You can't generate a yield on the cash. The company needs to grow. Well, the answer is you do a transformational acquisition. So if I could have bought VMware, or if I could have bought WhatsApp, or if I could have bought Snapchat, or if I could buy like a super high growth digital monopoly or some moonshot thing that would go to the sky, then yeah, maybe that saves the company. But those are few and far between. Yeah. Most of the time, these acquisitions that you do are dilutive. And I knew they're dilutive because, like, Pete, it's not my first rodeo. I lived through this. I invented, I launched 12 different product lines to grow the business, and they were singles and doubles or whiffs. And I know that just innovating won't always help you. And then I bought the stock back, and I knew that didn't work. And then I spent hundreds of millions of dollars on sales and marketing to expand the business, and that didn't work. And then I watched all my competitors, Business Objects, Cognos, every company, I watched them do acquisitions to try to grow, and every one of them failed in that strategy. There was a 99% mortality rate.
Wow.
The reason we're the biggest independent business intelligence company left is because the other 100 all went private, got bought up, got amalgamated, and sucked into the bowels of IBM and Oracle, and then dismantled over the course of 20 years. So I kind of knew, I tried everything for a decade. I knew it wasn't going to work from first observations. So I thought, well, what if I could find a digital gold, which was better gold than gold, something that is better than gold, but also a big tech monopoly? And here are my three criteria. I want it to be a better gold than gold. I want it to be a big tech monopoly, and I want no one else to appreciate it. I want it to be underappreciated. And that's what Bitcoin was in the second quarter of 2020. No one thought it was an institutional asset, even though Amazon stock had doubled in the second quarter. Bitcoin was trading about the same as it had been trading in 2018 or 2019. It got up to 10,000. It had smashed down to 4,000. It was back at 10,000. So I looked at it and I said, well, based on all the information, you would think that a digital property network or a global digital money network is more valuable, knowing that people are losing confidence in currencies, losing confidence in central banks, losing confidence in governments. And this is a non-sovereign, open, decentralized system. So it struck me that the fundamentals were good,
yeah, you would think
but it wasn't appreciated.
Yeah.
So we're there, and we have to take a risk. We literally have to, or we got to sell the company, right? We're done one way or the other. And I said, well, this is a reasonable risk because it looks like the Facebook of money or the Google of money in the year 2010 or 2011. While 98% of the world doesn't understand it, it's a bit too complicated, they're afraid of it. But just because you don't understand it doesn't mean it isn't true. It just means And I had the experience of riding the mobile wave.
Yep.
And I'm the guy in 2011 that bought Amazon, Apple, Facebook, and Google stock, and they all worked out well. And I thought, the year's 2020, we're at the end of the mobile wave. I tell a story of, I tell a funny story in the mobile wave about my niece on a beach, and she's like, I don't know, 8 years old, and she wants the Big Apple. And I said, oh, you want to go to New York City? She's like, give me the Big Apple for my birthday. And I said, you want to go to New York City? She goes, no, I want the iPad. And I thought, okay, little girl wants an iPad. That means that the entire world wants this, and this is going to be a big deal. So buy Apple stock. Well, in 2020, I'm talking to the same niece. And I said, what do you think? And she goes, yeah, well, I just bought some Amazon stock. And like Amazon's trading at like $3,300 a share, and it just doubled. I'm like, okay, well, if 20 somethings now know they should buy Amazon and Apple and Google, this is not a misunderstood technology trend anymore. Every Uber driver understands that.
This is like the 2001 .com bust, where every taxi driver back then was telling you what .com stocks they were buying.
So get off the mobile wave, get on the crypto wave, and think that through. So that kind of made the decision straightforward. It wasn't without risk, but the alternative was pretty much throw in the towel and just either get beat to death fast or beat to death slowly. And so we got into this business at that time. And of course, the last 2 years have been, I think, fairly good ones in terms of commercialization, institutionalization of digital assets.